Hey everyone, thank you for jumping back into Crypto Ods. Please give the video a thumbs up and subscribe to the channel. Today, let's talk about Bitcoin and some essential news we need to know and maybe even worry about that. If you look at the on-chain URPD indicator, which shows the amount of the accumulation at each price level, you can see that the largest cluster of accumulation in this level, 82k, at around 82k. That level also gains with the 100 weeks moving average. You see that 100 weeks moving average, and we already saw a strong bonus from that zone. Each time when we are touched that moving average, we got the bonus to 50-week moving average. In 2018, we didn't touch the 100 moving average, but we got that bonus, the bull trap I mean. And you see in 2014-15 we got the same one. From my perspective, just like a previous cycle, before entering a bear market, we usually got a bull trap. We might retest the 50-week moving average, which is around 98k, 102k. It's very important price level. In my view, for me to say that we are entering a bullish market, Bitcoin must reclaim that 110k price cluster with a strong momentum. Anything below that, in my opinion, is a still bull trap. We have to go above that level to continue the bull market. This level can be a good opportunity for experienced traders to open a position. It could become a very attractive trade. However, personally, at the moment I prefer short position. You have to move into the same direction as the market trend. Some people think that on December 1st, when the quantitative tightening ends, we will enter a bull market. But if I place the Federal Reserve balance sheet, let me add that here. You see the Federal Reserve balance sheet chart over the price chart. I add that now. You can see that after quantitative tightening ends, we actually enter even a sharp decline. The market right now looks very similar to the 2019. You see here, when the Fed start to cut the quantitative tightening, we got the huge, deep, sharp, and market start to bleed a lot. And when QT ends, it does not mean we enter a quantitative easing. It simply means the Fed stops withdrawing liquidity from the market. It doesn't mean new liquidity is being injected. It's also possible that until May, when Jerome Powell leaves and someone else replaces him, the market could continue bleeding even more. If we take the 2019 pattern here, let me take that. Yeah. Here you are. Let me add them to this, the current situation here. You see, if you add that the 2019 pattern to this current level, that market could continue bleeding even more. If we take even more, we might even see lower levels, especially with the monetary policy shift that will unfold next month. We can go, we can bleeding more even to 30k, 39k, even maybe 30k. As I told you last night in my last night videos about the that. Let me add the, okay. If you see that and this pattern, we can reach to 0.786 Fibonacci which is that 39k. We can go bleeding down to this level. That is possible. This is my my personal perspective. Why do I say we could see even more bleeding? Look at the consumer. Look at the consumer sentiment index. We are at one of the lowest level. That last time we were at such levels was during 2008, 2010, or consider the bankruptcy numbers in the USA. The situation is disastrous. We haven't seen this scale of bankruptcies in the past 15 years. The economic situation is not good at all right now. It desperately needs some real fundamental changes. On the other hand, Japan's 30 years government bond has dropped 48.5% from the peak levels. Which is catastrophic. Do you know what this means? Bond yields have an inverse relationship with the interest rates. When bond prices drop, institutions such as pensions funds and which hold massive amounts of these bonds faces severe financial stress. This shows that these ideas of near zero interest rate policy and cheap money have failed. Japan now needs to adopt strict monetary policy, monetary tightening, and rising interest rates. When that happen, investors who borrow the money at the extremely low rates in Japan to buy foreign assets like a US stock will be forced to unwind their carry trades. They will have to repair their loans, and meaning they must sell their stocks. This creates additional selling pressure, which cause both the stocks markets and the crypto market to drop even further. In my perspective, the situation in the economic, we are at the catastrophic ones. I'm not optimistic, honestly, but we have to worry about our investing. I wish the best for you guys. See you in the next video.